Alright, welcome back to my investing channel. Today we're looking at GameStop. This is February the 4th, 2021. Once again, this is not financial advice. You can feel free to copy part or all of my investing strategy at your own peril. Alright, so GameStop is sinking right now to lowest it's been in a while. It does go up and down quite frequently though. Let's look at the 1 week here. Okay, so yep, it was down even farther on just on the second. So it goes up and down, up and down. It is making a steady decline with some ups here and there. So let's go and look at my particular thing. Average cost 97. I bought most of them at 87, but then I bought one that was a little higher up, and that brought my average to 97. I sold a couple yesterday for a small profit for like 120, and I think I had another one for like 105 or something. So still profitable, but I'm holding the majority of mine still. You might be looking at this number saying, "Why is it so small? What are you, some sort of poor broke person?" Yes, it is correct, but I'm making this channel in an attempt to get more money, right? So that is that's the plan, right? So this is how much I have invested. As you can see, total returns are down by this much, $232, 14%. I have nothing but faith that it will go up. I have a limit sell, okay, 2 selling at 120, another 5 at 150, another 1 at when it gets to 1500, right? 1 at 270. These are all various ones. I have them divvied up at different prices. So why am I holding GameStop and not just running for the hills at the first sign of trouble? Well, a couple of reasons. As you can see, the Reddit board. Remember, hedge funds, blah blah, $3 a share. Everybody is going still strong on the Reddit train, so it's not dying down, right? So that is good news. And let's look at my other stocks, because I did cash out some of my I have kept a lot of it in cash because I'm planning on transferring out of Robinhood, so I don't want to buy a whole bunch of new stocks. I did get a couple extra DHT here, as I've talked about in other videos, the DHT and NAT. So that's what I'm waiting on. That'll be in about 4 days. They'll release their earnings, and then their earnings will be a good foreshadow of Nordic American Tankers earnings. So we'll see what happens with that, right? That's going up. That lost a little bit, only about 10 shares, and it's already down like a lot. Aqua Metals has its ups and downs. This one, oh wow, it's down today. I still had a huge profit. Some little penny stock. It's a mining company. Let's see here. A REIT, nice little REIT. I'm keeping it for a while. I like NRZ. I've had it for a long time, and I even put a couple dollars into Ethereum, just because I like Ethereum, and I do plan on, once I get out of my GameStop, and putting more into cryptos. I had some in cryptos, but I sold it to cover my margins when GameStop started to tank a little bit there. So let's see what else is new today. Well, we'll look at some of my other stocks that I do like or have plans on buying more of once I get more capital to invest in them. I like this. That's pretty good. Let's see here. That's okay. That's pretty good too. Coca-Cola, of course. Pepsi. Wow, they opposites, right? Dominion Energy. Nice to diversify with some energy stocks. Has a decent dividend return. I really like this one. That's a EFT. It's pretty good. Let's see here. Where is here? We see this first. Global Super Income Preferred EFT. Wow, now that sounds like a real fancy name. Let's go down here to Cisco Fifth Third Bank. I like that. I've had that for a while. It's not bad, although I am switching to Truist a little bit more. This one's good. It's a nice EFT iBox High Yield Corporate Bond ETF. It's not bad. I've had plenty of that in the past. I have sold it all recently. For other reasons, not that I didn't want to hold it. What do we got here? Two's good REIT. It's an excellent REIT actually. I remember when it was $2 a share. Like, wow. It keeps going up. It has great dividends. It's a solid company. If you want a REIT, NRZ's good. NLY and two's really good. This is the Schwab Dividend EFT. It's pretty good. It's decent. Nice little diversified, little safety boomer EFT, right? PFF. Here we go. iShares Trust, iShares Preferred and Income Securities ETF. Isn't that a fancy name? It's not too bad. I really like it. This one right here. High dividend, low volatility ETF. Man, that's great. And it really is pretty good. Let's see here. Price earning, dividend yield 4.76. It's not bad. It's not wonderful, but it has. Let's look at the 1 year here. Steady. Here's the coronavirus tank right here, right? And it's been making steady gains since. So that's good. So, and it's still below where it used to be, right? Because this is the coronavirus, so it's still well within buying territory. Still recovering. So, if you hop on this train, this will go back up to 40 easy. And it's got pretty decent dividends. It's it's an ETF and it's a good S&P 500 high dividend, low volatility. So this is very well diversified. So it matches the S&P pretty well. I got some dividends from before, right? I didn't have a whole lot in there, but 42 cents off of what, $40? That's not bad for 1 quarter, right? So if you're looking for a nice ETF to diversify, get a little extra dividend investing, this is definitely where I'd go. Have some options over here that I'm working on. These, of course, I really believe in the Y. This expires next year, so I've got plenty of time on that one. I think it might reach that. It was only like $1 when I bought it. DHT call, I sold that for $6, and it keeps getting close, right? It's been at like 550 for forever, right? At 540, right? 530, right? It's been pretty consistently in that range. It's one of those stocks that just stays the same, right? Its highest was 846. That was before the coronavirus, right? Wait, no, that wasn't. Oh yeah, that's right. It was holding. This spike right here is because when the gas prices went down due to coronavirus, the oil tankers were used as oil storage, and so they were storing oil there, and so the companies that owned the oil, these guys just owned the tankers, paid them pretty good money to hold the oil in those tankers instead of selling it to the companies to make gasoline, because gasoline prices were so low. So they had a nice little profit uptick there while they were holding oil. So when gas prices go down, these tankers, as opposed to other oil companies, actually can increase their profits. And of course, when oil prices up, people are wanting to transport more oil, and so these guys still get the good. They get the good when oil's down. So that's why DHT is pretty great. NAT, of course, being a sister company, these oil tanker companies. If you're going to invest in oil, I believe this is the best way to go, because it has that protection if oil prices do go down. They're used as storage because these tankers are so huge that they can be used as storage units for this oil. It's a bit expensive for these companies, but if they can make more money selling it later. So, of course, here's our analyst rating. A lot of them say buy, a lot of them say just hold. Some say sell. I don't know why. All the big boys of Wall Street, of course, have upped their ante. They've doubled down on this. NAT's been doing really well. And I discussed in my last video, we compared the NAT and DHT stocks and how they mirror each other. And let's see how that works out. And the dividend yields on these, 14.8% NAT. Now, they do have varied dividends. They go up and down. So every quarter they give a different percentage, but it's always high. It's never like 1%, and they haven't skipped a dividend in quite some time. The DHT, what's their dividend again? 24.9. Like, that's their dividend. That's outrageously high. Outrageously high. I wish it was every month, but it's every quarter. So you don't get as consistent stuff, but yeah, that's just. Show me another company that's this stable that has a 24.9% dividend yield. That's crazy. It's insane. All right, let's see here. 33.56. Okay, let's see what the NAT was. They're buy and sell rating. Okay, so there's a lot more. They have a lot more buy, but they also have a lot more sell and less hold. That's interesting. Why people value these differently, I'll never know, because they're basically the same company. They have had a bad last quarter. Let's look at their 1 year, and we can see their spike. Yep, see, they were holding the oil right there. Same exact time frame. See, the other one had the up and down. Same exact thing. So that's the stocks. These are what I'm watching out on. And feel free to copy or not, or just sit here and watch me lose money all day if you want. But this month. Oh, well, yeah, because the GME went up and down. But if you look at the year, wow, man, it was so high. I should have sold it, and then I could have bought back the same shares and kept the profit difference, but I did not. But I have faith that it will go back up. At least I must have faith, right? All right, well, that's about it.